We live in a fantasy world now. Reality has been destroyed.
This is the time that you really need to pay attention.
The probabilities are overwhelmingly on gold's side.
That is the best environment to see gold increase its value.
Welcome to Palisades Gold Radio. I'm your host, Tom Bodrovics. Joining me today is Keith Neumeyer, President and CEO of First Majestic Silver. Thanks for joining me today, Keith.
It's great seeing you again, Tom.
Great to have you back on the show. And it's been a while, so it's going to be good to get an update from you. So in your recent presentation in Germany, you talked about the 10 to 20 year goal of removing ICU vehicles from the roads, and that it was very likely going to take at least double that amount of time. So could we see an underestimation of the amount of silver needed in this transition as well?
Well, I don't think there's anyone actually estimating the number. That's the problem we've got. And, whatever input you want to look at, whether it's copper or silver or any of the other metals that are necessary to achieve these, these government objectives, they're just not realistic because the metal's just not there. This is a 50-year process to change the way we electrify the planet. It's an enormous task. It's going to require all governments working together with industry in a cooperative manner, and to try to get this job done and to get off oil and gas to a degree. We're never, I don't think, going to be 100% off oil and gas. It'll always be necessary in some component of the energy grid or the supply chain, but nevertheless, we can reduce it by a substantial amount by using new technologies. I personally am a fan of hydrogen. I think that's really going to be, or nuclear. I think those are probably really the two long-term solutions to the current situation. The electrical battery and electric cars are a good stepping stone, to get us there.
So considering the growth of the tech sector in recent times, Keith, how misguided is it for them to be demonizing the mining sector? You mentioned nuclear power there recently. It just seems that at every turn, the mining industry is held back and demonized by these tech companies.
Yeah, it is pretty shocking. I've been in the mining sector now for 35 years, and I'm a big proponent of the mining sector. I'm sure the mining sector can get better, but I think any sector can get better, with innovation and technology. Technology is improving businesses throughout the world, regardless of the industry that you happen to be in. In mining, we're probably behind on some things. The mining sector tends to move very slowly, but that's just because of the investment cycle. It takes 20 years to get a mine up and running. So, if you pick a certain technology to produce a certain metal, you're going to build an infrastructure and a plant designed for that particular thing. And it's going to be producing for 30, 40, 50 years. And it takes a long time to get paid back. It takes big investments to build these operations, infrastructure, water, electrical. Mining companies have to do the whole thing. You have to build communities in a lot of cases. And these are long-term jobs as well. And then, these jobs pay for kids' schooling, university education. When you have a business there that's generating as much as a mine does for 50 years, that's a couple of generations, or at least a generation and a half. So that's really the driving economy of that town. And these high-tech companies, they don't see that, and they look at, the mining sector as some evil, company, but yet we're polluting the planet or something like that, which is, yes, that type of thing goes on, but not from the big companies like the First Majestic, or the smaller local artisanal miners, those are the ones that are actually, creating all the havoc, all the pollution. They're using bad techniques and they don't care what goes into the rivers and things like that. And we're always battling against, those types of artisanal miners because, we bring proper technology, proper techniques to the business. But I'm not sure what presentation you were referring to, but there was a presentation I did in Germany where I pointed out, the top 5 high-tech companies. I think my slide said has a market cap of something like $5 trillion in that range, and the top 50 mining companies had a market cap of $500 billion, I believe it was, mm-hmm. And these 5 high tech companies wouldn't exist without these 50 mining companies.
So, Keith, are there any scenarios where you could see the possibility of any of these major tech companies moving towards owning their own mines in order to secure supply of raw materials for their production?
Well, you've seen the movie I, Robot and, the movie Terminator. I'm not exactly sure where the world is going, but, as AI, comes into being, and, you've heard Elon Musk speak about AI and, his concerns about it and so on. And, who knows what the next 50 to 100 years is going to look like. But, big corporations are getting bigger. We now, I think, have $3 trillion companies, if I'm correct on that. It could be 4 actually, but nevertheless, that's never happened. We've never had $1 trillion company, and these companies are getting bigger and bigger and bigger. And any company, even the First Majestic, we want to own more of our supply chain. The more that our supply chain that we can control, the more profits that we will make, and the less volatility we'll have in our business because we have more control over it. So any company wants all that. You could call it monopolistic if you wish, or call throw any name at it, but that's just a fact of life. It's efficiencies as far as the senior management is concerned. So if you're at the high level of Apple, and you need silver, to produce your iPhones and your iPads and all that, and silver, there's only a limited amount of supply out there. Why not go buy yourself a silver mine or buy a First Majestic so you own a portfolio of silver mines? I think that's very likely to happen.
Mm-hmm. So, Keith, we consistently hear about the supply shortfall and record demand for silver, but I'd like to get your thoughts on if we see this price trend continue, if someday that leads us to a place where the manufacturers need to move towards finding silver substitutes if they can't get supply.
Well, that's the problem, right? Because there is no substitute. We have a headline on our website clearly stating there's no substitute for silver. Dupont, who's the largest silver paste manufacturer for solar panels, they've been trying to reduce the amount of silver they use in this paste, for economic purposes. The word that I've heard from experts in the area is they pretty well or have already reached the limit. They just can't reduce more silver, or they just start losing efficiencies. So whether that's exactly true or not, I don't know. I'm not a scientist, but that's the information I've been able to gather. I saw an article out of London, England, just about 2 weeks ago, suggesting that in 2022 there's going to be 140 million ounces of silver consumed in the solar panel industry, which is a pretty big number. Because the number for 2021, we don't know what it is yet. It's not public, but it's somewhere around 100 million ounces. So whether it's a 30-40% increase year over year, that's a pretty darn big number. And the miners are only producing 800 million ounces in 1 year. So you got one buyer for almost close to 20% of the entire supply. And then you've got, the electric car industry, and I haven't seen the 2020 production numbers yet. I'm not sure why they're not out. I've looked for them, but haven't been able to find them yet. But the 2019 numbers, there was 95 million cars built worldwide, and there's less in 2020, of course, of COVID and so on and so forth. But 2019, and of those 95 million cars built in 2019, 5 million of them were electric vehicles. And we consume 60 million ounces of silver to produce those 5 million electric cars. Mm-hmm. So, if governments want to reduce or increase the electric vehicle fleet on the planet, they're not going to do it at 5 million cars a year. They're going to have to do it at 10 or 20 or 30 or 40 or 50 million cars a year. Mm-hmm. And how are we going to get there? I don't even think the manufacturing, like Volkswagens, Audis, BMWs, Mercedes, Teslas, they're just ramping up now. So it's going to take them a couple of years to get close to those kinds of numbers. And if 5 million ounces, 5 million electric cars equals 60 million ounces, you do the math. That's a lot of silver in a pretty small market.
Mm-hmm. And at 5 million vehicles per year being produced, you're probably not even replacing the amount of internal combustion engines that are coming off of the market, off of the roads, right?
I wouldn't think so. These are people that are just buying new cars, and their used car goes to a family member or it gets sold, and gets resold. So that fuel combustion car, still, you're right. That's a fantastic point. It's still on the road. You just added another car. Mm-hmm. Yeah, there's about 1.4 billion cars sitting on the surface of the earth right now, apparently.
Mm-hmm. So is it possible that silver recycling ever becomes an important source of supply in the near future, Keith?
It's back in 2011 when silver hit $50. According to the Silver Institute, the recycling hit 240 million or 250 million ounces that year. It was the highest ever. This is where all the silverware started coming into the system. Anyone that had it was just free money, basically, I guess, in a way. And so all of a sudden, all the silver hit the market. So what would the price have to be for that to occur again? Because the theory is that silver is gone now. It's been consumed in electronics. So, you would need what, $80, $100 silver before you'd have a huge influx of new recyclable metal. I don't know. I personally invested in a couple of recycling companies here in Canada, and two of them are bankrupt. One is still surviving because it's just so difficult to get this metal out of these electronics. These electronic manufacturers are very good at embedding tiny amounts of gold and silver and copper into layers and layers of silicon wafers and computer boards, and to get it out, it's just not economic. So a lot of this computer waste just builds up, and even China's not taking computer waste anymore because of the pollution that it was causing, because they were just burning it. They were putting it in their smelters to just try to melt it down, and it was causing all kinds of issues. So a lot of this computer waste is just sitting there accumulating.
Yeah, that's an interesting point that you bring up, that the last time we saw a major spike in recycling or recycled silver would have been much easier to refine than the type of recycling that we think about now from computers and cell phones and high tech pieces of equipment like that, right?
Yeah. Well, during the photographic age, and when the photography industry was using or consuming 25% of the world's supply of silver, that most of that silver was recycled. Because when that film got dropped off at the local photography store, the liquids that were used to make those or develop those films was accumulated, and it was picked up by groups that actually took the silver out of this liquid, and it was actually quite a large business. But that business is pretty well gone now.
So, Keith, do you think that the current pricing system for the metals is broken?
I do, and I suppose it depends on what side of the equation you're on. If you're part of the system, part of the banks, yeah, I think they love it. But if you're a miner, who feels that we're not getting fair dollar for our metal that we use blood, sweat, and tears to pull out of the ground and process and get into industry, and such a critical strategic metal, I'm referring to silver. It's shocking that what we get paid for such a critical metal. And I've said a dozen times, and I don't get a lot of traction, unfortunately, because I feel somewhat alone often. The miners really need to get together and create a new system. And why does look at how uranium trades. It's a by contract, and there's no futures market. Oil, I think oil trades more fairly than there's so many big players in it. It's more supply demand fundamentally driven, but even it's politically driven to a point. But I just think we need to get rid of the COMEX. I think the COMEX is really the problem. When you can write a billion ounces of silver in a single day, when the miners are only producing 800 million ounces of silver in a full year, that shows you there's a problem. Mm-hmm.
So considering exactly that, Keith, considering the hedging and de-risking mechanism that the futures markets do play, what do you see could you see as a replacement for that system instead?
Well, I think the miners just have to break their relationship with the banks, and it's hard. It's hard to do, and the problem is, a miner produces two types of products. One is a smelting, like a concentrate, which is a combination of a variety of different metals and basically just a pile of black powder, and it's very hard to get rid of. Each one of these piles, depending on what mine it comes from, they're all chemically different, and they all take different processes. And the miner has to find a home for this product. And most of these homes are in China or Korea or, in some cases, Europe or potentially Japan. But there's very few in North America. There's only a couple. So it's hard to dispose of this concentrate. And there's lots of pollutants in this stuff. It's you're wanting the silver and the gold, of course, or the copper, because that's where the money is. But there's lots of things. There's selenium. There's all kinds of bad arsenic. There's all kinds of bad stuff in there. Mm-hmm. So, anyways, it's very expensive, and it's hard to break the relationship because you have a financial relationship with the smelter, who's got a relationship with the bank, and they already have homes for all the metal. Right, so that creates a very difficult thing to break and rebuild that system in some other way. You almost have to own the smelter, and which a lot of mining companies don't own their own smelters. Doré producers, of which First Majestic is, fortunately, all our 4 mines produce doré bars, and this is a nice refined product. It's and there's lots of places to send it. In the United States, there's probably a dozen refineries in the United States and then Canada. So it's easy to get rid of, easy to refine to a triple digit or triple digit, a 999 pure commercial bar, 1,000 ounce. It's very easy to do. And we can warehouse these bars, which we do. You've seen us hold back our sales a number of times. And we can do that because we have these physical bars. If we were producing a concentrate, we couldn't do that. So for a company like ourselves, it's easy for us to break that relationship with the bank because we just eliminate them. And we say, and then we go right to Sony or Apple or whomever and say, yeah, we'll give you our supply. We're not going to fix a price. You're still going to be subject to price fluctuations, but we'll guarantee that you get X amount of our metal. And then those are the kinds of contracts I think that we should be looking to achieve.
Mm-hmm. So could you see, a possible scenario where there are, let's say, 5 mining companies in one particular area that all go in together to buy their own smelter to kind of help break that relationship?
It's possible. It's tough permitting a smelter. One of the reasons why there's not that many smelters in North America is because no one wants a smelter in their backyard. That's why most smelters are in China and places like that. Yeah, and they're very expensive. So, to build one permit, you're probably talking like $1 billion and probably 10 years of work. And, it's a big commitment, but it could be of interest.
Mm-hmm. And just for those that aren't clear on let's say the difference between a doré bar and let's say 1,000 ounce COMEX bar, what is the biggest difference there, Keith?
Well, it kind of all comes from the rock. So usually, a rock is made up of many, many metals. And you've heard the phrase sulfide ores. Normally speaking, not all sulfide ores, but normally speaking, sulfides come with all kinds of ugly materials like arsenic, as I mentioned, and lead and zinc and, stuff that you don't want, and stuff that doesn't pay. It actually costs you money. And then the smelters actually penalize you if that rock, contains too much of certain elements. And it can get quite expensive to get rid of some of this material. You're hoping you're going to get paid on the silver and gold or the copper because that's where all the money is. And then penalties that you might be getting are less than what the value of the good metals are that you want. But it is a challenge. And I'm not sure if I answered your question, but
what is the main difference between a doré bar and a 1,000 ounce COMEX bar? Is the doré bar somewhat unrefined compared to the 1,000 ounce bar?
Right. So sorry about that. Yeah, a doré bar, and I just was down at Jerrit Canyon, one of our mines in Nevada, and I just had some pictures taken with some beautiful gold doré bars, and they weighed like 80 pounds each, and I was barely able to pick one up. But it's solid, virtually a solid block of gold. It's and some silver. So it's really you're in the mid 90s range. And those pollutants are generally just like lead or copper, just miscellaneous kinds of metals that will be in there. And then you ship it to Johnson Matthey or Asahi or a different refinery. They're all over the place, and they just put it through a chemical bath, a chemical process, and through electrowinning, they pull out all the stuff that they want, and they create commercial bars, and that's what's sold into industry.
Perfect. So you mentioned there, Keith, as well, in Q3, you decided to withhold 1.5 million ounces of silver. So talk to us a bit about what drove that decision and how long do you plan to withhold it from the market?
Well, we have now liquidated that position.
Okay.
So it's not our business to hold or warehouse metal. Our shareholders want to see a top line and a bottom line. And, that was, $35 million worth of silver that didn't hit our revenue line. And, it's the institutions, in my view, they don't particularly like it, right? Because they want to see real revenue and real profits. And so we do it periodically, but, we've had silver go from $18 to $30 in a matter of a couple of months, and then it dropped all the way down to the low 20s, and then I just figured it's this time. It was just so anomalous to me, and I just thought a bounce was going to occur, and my old trading blood in me, because that's where I come from, and I just thought it was a good trade, and it turned out we made a couple extra dollars on those ounces.
Yeah, and that kind of speaks towards, being able to invest in management and how the company is run versus just always liquidating whatever you have, right?
Right, exactly. And, it's, if you go back 15 years and maybe even longer than that, but because the number I watch to see if I'm successful or not is, are we beating the average COMEX for the quarter? So, and I watch those sales. So our gold and silver sales, I met because we report what our, average selling price for that quarter was. And I always look at the COMEX and I go, okay, how good was I this quarter? And I usually, I think they beat me maybe only a couple of times.
So, Keith, in your view, has the mining industry really improved fundamentally over the last 20 years? And if so, what do we need for mainstream investors to see the value that these mining companies are producing?
Well, what I see, is in Mexico, we've been in Mexico for 19 years now, and we started hiring young kids out of university. There's a couple of really good mining universities or engineering universities in Mexico that produce a lot of really good talent, and we're hiring entire graduating classes. 20 kids, girls and guys, electrical engineers, chemical engineers, and they're mid-20s, and they're coming into First Majestic with iPads and iPhones, and they're walking around and they're going, all these old farts. Like, what are you doing? What are you doing it that way for? There's a much better way of doing it, and it's really interesting. And this has been going on for well over a decade, and a good handful of those original hires that we hired still work for the company today and in management positions. And they're in their mid-30s, and they're leaders within our business. And we continually do this because the mining sector, as I said earlier, is just a slow-moving beast. You have a lot of older people like myself that have been in this business for a long time, educated in a certain way. And there's this education gap, particularly in the United States and Canada, where the kids just didn't want to go learn about engineering or mining. They want to become lawyers or doctors or whatever. And so this sector has been under educated for quite some time. So it's really Latin America that I noticed it's really kind of filling that gap. And even at Jerrit Canyon, we have a number of our senior people that were educated in Latin America. in engineering because those talent pools just aren't available in the United States or Canada.
So considering that the mining sector has become much more profitable, less debt on balance sheets, characteristics like that, Keith, do you see the mainstream investor recognizing that at some point?
I could be hopeful, but I think that investors are so short-sighted, and that they're just all momentum driven. Something's going up, people are going to buy it. Gold's been sideways for good 18 months now, and it's hated because it's not moving. The whole mining sector is down from its highs, and no one wants to invest in the mining sector. But the second that changes, then mining's the best sector to be in, and gold's the best thing to be buying. It's all headline driven. It's all momentum driven. I don't think many investors look at fundamentals really to any great degree. I think they're all just wanting to make money. And I look at what's happening today very similarly to what happened in 2000. When we had the Nasdaq boom, the .com boom, Y2K. And then Nasdaq peaks out in March of 2000 at 5,000 points, and it over the next 3 years it drops 80%, and then that lit up the resource sector, and we went into a 10-year bull market in resource stocks. That's kind of what I'm thinking is going to happen. Hopefully, I'm right. We'll see.
So you've said before that there's enough money for the sector at these metal prices to keep exploring, and that's a major change over the last decade when we saw a major lack of exploration. So in your view, have we seen all of the big silver and gold mines being discovered, and have we hit really peak production for the metals?
Well, copper and silver, are challenging because I think, whether we've hit peak, I don't know, because, peak to me is always price related, right? Because all of a sudden, if my theory is correct, that we're going to see triple digit silver, which, call it what you want, $125 or something like that, which I think is a reasonable number. You're going to have a whole bunch more money coming into the silver sector, and a lot of these low grade mines that we know exist, high up in the Andes, that are going to cost $1 billion to build, but they could get built, and if they do get built and permitted first and then get built, you're talking probably about 10 years to get them into production before. Nevertheless, that would add, substantial amount of silver to the market. At $25 silver, there's not sufficient investment going on. And you look what's happening in a lot of the silver-centric countries around the world. They're becoming more anti-mining. You look what's going on in Peru and Mexico. With some recent news, unfortunately, out of Mexico, Argentina, Chile, Bolivia, these countries are, moving to the left and moving, very much anti-mining. So, as a world population who wants to go green, and it's very negative news because, we need this metal to achieve these objectives. And if these mines keep coming offline, the way we see them happening, that's a big problem.
And of course, an important point there is, if we do see, like you said, for example, $125 silver, we need a sustainable run of the price being up there before those mines are permitted and built, right?
That's a perfect, you're dead on that, Tom. I was just in a meeting last night and we're talking about M&A in the gold sector. And, there's still CEOs in the gold sector using $1,200 or $1,300 gold in their analysis of takeover targets. And we haven't seen $1,300 gold for a few years now. So if these executives don't believe that $1,800 gold or $2,000 gold is here to stay for a sustainable amount of time, they're not going to make the investments. And that's one of the reasons why you're not seeing a lot of M&A activity.
So do you see that as a positive or a negative for the industry, Keith, that the guys that are closest to the ground aren't counting in $1,800 gold?
I blame it on the financial institutions and the hedge funds because during the last big run, when gold went up to 1,800 and silver got up to $50 back in 2011, there was a lot of big transactions done, right? And the executive teams of those companies felt they were doing the right thing. They were being pushed by the banks to do it. I remember, being, running CEO for First Majestic for so long. I was getting deals shown to me on a weekly basis. Oh, you should look at this. You should look at that, and all very low grade, high cost, assets, which would take, a sustained, long term, high metal price to permit and build, and so on and so forth. And I didn't take the jump and take advantage of any of them, but I know a lot of teams did, and a lot of mining companies did take on some pretty big assets. And then as the market turned, over the next 5 years, they were highly criticized, for doing what the banks were basically telling them they should do. Mm-hmm. And it was the banks and the institutions who actually funded these acquisitions who came out against the executive teams of the mining companies. So now we're not back into a relatively high-priced metals market, maybe not high price, but better prices anyways. Mm-hmm. And we're not seeing that activity because, in my view, these management teams are paranoid about running into the same problem they did before.
Mm-hmm. So maybe a bit of conservative estimates is actually good for the way that the industry is being run, right?
I suppose, yeah. You probably may not see some of the big transactions, but look, if you need to be big to build $1 billion mine, mm-hmm. Look at Springpole, the mine that First Mining Gold owns. I'm the chairman of that company, and it's going to require $700 million to build that, and we're 2 years into a 4-year permitting process. How's First Mining going to raise $700 million? They're going to need a partner. They're going to need a big partner to come in and assist with that. So, the big guys have to play. So they need to be using. If we expect to produce more metal, which we have to do to achieve all the things that we want to do as a human race, the mining sector has to be more aggressive.
Mm-hmm. Keith, you mentioned First Mining Gold and also the Jerrit Canyon mine. And you've, of course, been widely known for your focus on silver. So what makes the move towards gold more appealing to you here?
Well, it wasn't a matter of being more appealing. There's a couple of decisions that were made, or a couple of reasons why I made that decision. One was political risk. Mexico is not what it was, 19 years ago when I put together the company. Mm-hmm. I felt it was time for us to step out and look for other assets. We've been looking for silver assets, for the last couple of years, and they're just extremely difficult to find good silver assets. Mm-hmm. Peru is a good place to find them, but I don't want to go to Peru. Mm-hmm. Nor do I want to produce a bunch of lead and zinc. And a lot of these silver assets, are really only 30% silver, and then the rest is zinc and lead. And that's not of interest to me. So a lot of assets were eliminated from our list of the potential targets. This asset was privately owned. Jerrit Canyon was privately owned. If it was publicly owned, I'm sure it would probably had a market cap of $1 billion, I would think, or somewhere around that number. We picked it up for $470 million, and then we feel that it's expandable. So when we look at targets, what can we do to improve the asset? Can we increase the life of mine? Can we reduce costs? Can we increase production? What are the reasons why it's operating as poorly as it is right now? And identify them and see if our talent can make changes to improve the asset. And that's what we do. We're basically turnaround artists. And if you look at all our acquisitions over the last 19 years, we've always bought out of favor assets that were somehow struggling, usually due to lack of capital or lack of talent. And we could bring that to the table. Jerrit Canyon, we think is a perfect asset for us. Yes, it's 100% gold, but it is doré bars, so that's a big deal to have a doré producer. It's the mill has got a 5,000 ton per day throughput, and it's operating at half that number. And we think we can get it up to 4,000 tons by the end of 2023, and our target's to hit somewhere close to 200,000 ounces of gold in 2024, which is, basically twice the size that it is today.
Mhm. It's funny that you mentioned that phrase of being a turnaround artist or turnaround specialist. I spoke with Jeff Clark last week, and he said exactly that about you guys stepping into Jerrit Canyon. So how do you go about identifying inefficiencies within projects that you're looking at?
Well, it's of course we have a big staff, of people and a lot of talent behind me. I'm the spokesperson and the founder, but there's a lot of people behind me that are there doing a lot of good work. And so we go grassroots, right to site, interview management, look at processes. Metallurgy is a big deal for us. We're very good metallurgists. We have a very strong metallurgical team. When we bought Santa Elena back in 2015, for example, the recoveries there were 65%, and today it's 96% in a matter of a couple of years. And that's just our knowledge and our work. And when we achieve those types of things, all the time. And so metallurgy, then geology, of course, is critical. Is this resource expandable? Is the life of mine expandable? If there's 1 million ounces of gold there with no expandability, it's going to be of a lot less interest to us than if it's 1 million ounces of gold and our geos are excited about it and they think there could be 5 million. But it's going to take time and money to get there. Mm-hmm. So we need to have a geological view as well.
You said earlier that you didn't want to go to Chile. And, looking at the recent projects that you've been involved with, let's say Jerrit Canyon in Nevada or First Mining Gold in Northern Ontario, are you sticking to these jurisdictions just because they are so much safer to be able to operate in and more predictable, let's say?
Yes, absolutely. I'm not saying there's not going to be another M&A transaction in Mexico. We have our eyes on a couple of interesting assets in Mexico. It takes two to tango. If one happens to come our way, we might decide to pull the trigger and buy one. But the focus right now is really United States and Canada. We've got a couple of balls up in the air there. And again, I don't know if things are going to happen because you just never know, but we're always looking around for good assets. But hopefully, the next one will be much more silver centric.
Mm-hmm. So, of course, the last time you and I spoke, you had just acquired Jerrit Canyon. So, can you give us an update on what has happened since you acquired it and the path forward for it?
Yeah, well, the first thing we did was eliminate, let go, I guess is the better word, the top management team. There was 18 individuals that we eliminated virtually on day one, and put our own people in place. So that whole management team is now brand new. Mm-hmm. And our COO says that of all our mines, it's the best management team we have in place in the entire company. So the site's done a really good job. HR's done a really good job. Steve and Michael, the GM there, has done an excellent job putting the talent pool together. Mm-hmm. And then once you accomplish that, then you start having to making investments in inefficiencies. So and so mill improvements. One of the interesting things that we did early on was we tried to break the mill, to see how where's the weaknesses. So
what its capacity is.
Yeah, so we ramped this thing up, to over 4,000 tons a day to see what breaks, and of course, a few things broke. So that that gives us an idea because by the end of 2023, our goal is to have this thing running at 4,000 tons a day, 365 days a year. So you have to capex around that, and you have to know what to do. So that's one of the early things we've done, and now we're making those investments. So there's about a $15 million investment going into the mill in 2022. And then exploration, it's just, we got 7 rigs going there. They haven't drilled a hole, a true exploration hole on this property for 15 years. And wow. It's all the drilling that they've done is just for mining, underground mining, just following the structures. And because they didn't want to spend any extra capital because it's always been cash starved. So we're drilling in 2022. I think we're doing 100,000 meters of drilling on at Jerrit Canyon and testing all kinds of targets that we identified. Well, not just us, but prior management teams have identified. And we're getting some pretty interesting results already early on, and we think the life of mine is going to be. We're going to put out a new 43-101. We hope by the end of 2022, and we expect to see pretty substantial increase in life of mine.
So, considering that it's in Nevada, are there any other plays in and around that area that interest you as an investor, Keith?
Oh yeah, for sure. What two things? From First Majestic's perspective, we are looking around. We're focusing on silver assets more than gold, but also we're looking for feed. Because that mill, it's going to take us a good year to 18 months to really develop enough ore ourselves to fill that mill. So there are juniors in the area that have approached us, and there is the potential that we could be buying some ore from neighbors just to fill the mill in the interim. But from a personal perspective, my first investment in Nevada was really at Silver One, and we still have our eye on that company, and it's still early stage there. They had interest in drill program. But I guess probably my largest personal investment in the state of Nevada is Nevada King, run by a mutual friend of ours, Colin Cattell, and he's from Newfound Gold. Was one of the founders of that company. Everyone knows it's done an impressive, very impressive, or very well, I should say. Mm-hmm. And so we're hoping for some similar successes at Nevada King, and First Majestic actually made an equity investment in a company called BlackRock Silver, which is getting some pretty interesting drill results as well. So we're kind of spreading our thing, from a personal perspective and a corporate perspective. We're kind of spreading our fingers around Nevada.
It's interesting to talk to you about what you think about as a CEO that is in the industry. What you think about when you think about investing in the sector itself. So, Keith, are you looking for the people to be able to run the proper projects? Are you looking for jurisdictional risk? What do you think about, or what do you look at that's top of your list when you're thinking about investing in a company?
Yeah, it's always people first. Jurisdiction and price and stock structure and the asset all comes into the equation. But I don't even get to those questions until I pass the test, or the management team passes my first test, and that's what have they done historically? Have they created wealth before? Who do they have around them? What's the skill set of people? And are they serious players? Are they actually really trying to build a business, or are they just trying to pump a stock? What's the business plan? What's behind this? And when it comes down to trust, a lot of cases. So I like to reinvest in management teams over time, and then I've done that over 20, 30 years, and management teams come to me and are trying to put together a new company, and I'll say yes right away just because I know them, and the amount of my investment will depend on things like jurisdiction, the asset itself. It's like I don't like lithium, but if the right management team came to me and said, "Hey, I'm putting a lithium company together," I would probably give them some money, despite the fact I don't like lithium. Right, but if that same management team came to me with a silver project or a nickel or a copper project, my interest level and my investment would be much larger.
So when you think about the end game, Keith, are there any thoughts you have or that you'd like to share with us around when it's time to actually start getting out of a position, or is that more cycle dependent?
No, I'm pretty strict on that, and I don't get the tops. I have got tops before. I got a top in a company I just been liquidating just about 6 months ago, which was kind of nice. But when I buy a stock, I figure out when I write my check what my expectations are for that stock. I say, is this a trade that I'm going to be out within a year? And my expectations is 100% gain or 200% gain or thereabouts, maybe 300% gain. And I'll just kind of formulate that in my mind. Or is this going to be a 5-year investment where this is my first toes in the water on this company, and I'm going to accumulate a much larger position over time. And I'm looking for a 5 to 10 bagger, over a 3 to 5 year period. So once I decide on what type of investment it is, when that stock hits those levels, I'm a seller right away. And I'm depending on the fundamentals, I might sell less. If 300% is kind of when I start really looking at something, and I'll likely sell 25% of my position at 300% gain. And usually at a 400 to 500% gain, I'll probably be out of half my position. Or I could be out of all of it. It just depends on, I'll start looking at fundamentals at that point. What's driving the stock? Is it drill results? Is it, going into production, financials, or what's driving it? So I'll make a call whether I should be at 100% or whether I should hold on, maybe keep 25% of my position for, that 10 bagger. But I don't hold on to my entire position looking for a 10 bagger. I think, because they don't come very often. And, even a 5 bagger, are pretty rare. But I'm not sure if that helps, but I'm just very disciplined. And I always like that.
As you're, going through your answer there, I was going to say discipline seems to be very important on being able to get out of a position and having that number in mind before you even write the check.
Yeah, no, look, I stock just last year, and I came into it in the $1.50 range, and I wasn't introduced to it during the seed range and for seed capital raising range, but I liked it when it went public, and so I came in with a relatively significant position, and the stock was at $4 within literally 2 months, and I started liquidating my position. I was out of it by $5, and I was quite happy. 300% gain, in a matter of 3 months. Much more than I expected in such a short period of time. Well, the stock's now $12. But I don't care. I did well. And the nicest thing about it is that every person that bought my stock made money.
Yeah, absolutely.
That's a good thing.
Absolutely. And as you were mentioning, layering into a position, do you have to see the company just hitting the milestones that they've laid out for themselves for you to keep layering into that position?
Yeah, I stay in contact with all the companies, that I'm active in. If it's a small investment where it's just a $25,000 punch or something, just because a friend of mine suggested I buy it or something, that's a different story. But if it's a, substantial investment where I'm accumulating a position over time, and a lot of these stocks are highly illiquid. I'm accumulating a couple of stocks right now, and I'm having a hard time. If I buy 5,000 shares in a day, that's a big trade. So, it takes a good year, to accumulate a reasonable position. Right. And in a situation like that, I'll be talking to management at least once a month and just getting an update on what's going on. And I'll read the financials when they come out. I'll read any filings that they're putting out. I'll look at the circular when it gets mailed out. And so I'm pretty active.
Excellent, Keith. Is there anything else you'd like to touch on before we wrap up here?
No. It's people. I took a company public recently called Snowline Gold in the Yukon. People should have a look at that. Jeff Clark, you were mentioning, you interviewed. He's talking about Snowline a lot these days, which is kind of nice. It looks like a whole gold camp that's being developed, and of course, Nevada King, people should really have a good look at that one. It's super cheap right now. It's down substantially from where it was a few months ago when it first came out. So there was some stock distribution that was done from one of the major holders. And I think that's created a little bit of pressure on the stock. So it's been, in my view anyways, do your own due diligence. But I'm a buyer. So if people want to look at that company, I think they should probably go have a look.
Excellent, Keith. And of course, you have a very interesting Twitter feed. You put out a lot of good articles and videos at Keith_Neumeyer. And you can check out, First Majestic, firstmajestic.com, and all of the other companies mentioned. their websites. Keith, thanks so much for your time today. Really appreciate it.
Yeah, it's good chatting again, Tom, and look forward to do it again sometime.
Absolutely. Happy to have you back anytime, Keith. Thanks.
Thanks, Tom.
This podcast is for general informational purposes only. Nothing on this podcast should be taken as investment advice. Guests on this show are not compensated for their appearance. Listeners are urged to educate themselves and make their own decisions. Do not base any investment decisions on the information contained. To view our full disclaimer, please visit our website.